The bear market is upon us, and market downturns call for changes in investment strategy. And today's video will be covering 4 bear market strategies that we can implement today to set ourselves up for future success tomorrow. Hello everyone, I'm Nathan, Senior Researcher at Collective Shift, where we share the latest and best crypto analysis and advice on this channel to help you create more wealth and freedom. As mentioned, we will be covering 4 bear market strategies today on this video. And before we dive in, if you're enjoying the content, please take a moment to like the video, subscribe, turn on notifications so you don't miss our latest and best crypto advice. Now let's dive right in. First bear market strategy is discover your digital identity. At the moment, your digital identity really means your avatar, your profile pic, and your domain name or your Ethereum name, your ENS name. Now, here is my Twitter profile at the moment for my digital identity. As you can see, I own my image, my avatar. I own my name. My digital identity is mrcartographer.eth. So I own my image, I own my name, and I even actually own my banner behind me as well with a few of my NFTs listed there. So this is really step 1 for the digital age. Discover your digital identity. Own it, become it, and enjoy your digital presence separate from your physical presence. How much you want to mesh the two together is up to you. Now, how do we do that? How do we discover our digital identity? Well, we're really breaking it down to avatars and domain names or Ethereum names at the moment, and pretty much just for social media use. Much of our digital identity at the moment is limited to social media at the moment, but don't be discouraged by that. There will be a plethora of opportunities and social platforms to use our digital identities in the future. That's not just Twitter. That's not just Discord. There will be better services or, futuristic, more Web3 services in the future. So setting up your digital identity today will be beneficial for the future. And how do we do that? Well, a good example is to come to OpenSea and find an avatar that resonates with you. Find an avatar that you are proud to display and say, yes, this is me, this is my digital identity. One example would be the crypto commons. I'm a big fan of the crypto commons. I bring them up as an example because whenever I see people buy their common for the first time, they'll typically go to Twitter and actually, say how proud they are of it and how much they've been wanting to buy one and looking at the commons for a while. So they're a really good example of people who have purchased a common for their digital identity and now actually use it and respect it and are proud to be a covenant to be part of the crew. Now, additionally, we could purchase an avatar, make it an avatar NFT, and make it our profile picture. Then we could also come over to Ethereum name service and find your digital identity. I'm Mr. Cartographer, so let's say I was looking for mrcartographer.eth. I could type in mrcartographer, and what do you know, it's probably open, because who wants to be mrcartographer? And as you can see here, I could get 10 years for about $60 plus gas fees. Actually, it looks like this includes gas fees. So for about $60, I could get my digital identity, or at least, a pretty complex one, mrcartographer.eth, for the next 10 years. And with this, pairing my ETH name with my avatar, I would have my digital identity that then I could, parade around social media and be part of a given NFT community. So that is number 1. I can't stress this enough, really. Discover your digital identity, own it, be proud of it, share as much of your real life world with the digital world as much as you want. And it's really up to you how closely tied they are. Me, I have a bit of a pseudonymous identity where I don't really want people to see my face on my social media accounts, but if you happen to find me through LinkedIn and Twitter, it doesn't really matter to me. I'm really not trying to be anonymous. Bear market strategy number 2, and that is participate and find the ETH scaling solutions that work for you. Today, we're going to be talking about 3 ETH scaling solutions. I'm on DeFi Llama, I believe .com. And I'm on the chains page where we're talking about total value locked on all blockchains. Now, Ethereum right now is the clear winner in global commerce to be pretty much the best general purpose blockchain out there. So this is a de facto that we're going to be using Ethereum. And then my recommendation for the bear market strategy is discover an ETH scaling solution. And the 3 that we're going to be talking about are Polygon, Arbitrum, and Optimism. Polygon has a token, the MATIC token, MATIC. Arbitrum does not have a token, and Optimism just released their token, the OP token, earlier in 2022. I'm picking out these three specifically because Polygon's become a very trusted name that's scaling Ethereum through additional block space. We've seen Aave and the Lens protocol go and build on Polygon, giving the blockchain massive credibility. And then additionally, we've got Arbitrum and Optimism as pretty much the two leading layer 2 solutions for Ethereum. Now, the OP token release wasn't that great. Arbitrum's currently having issues with scalability. They're trying to ship an update so that they can continue their Arbitrum Odyssey airdrop experience that they're doing over 8 weeks. If you participate in what they're calling Arbitrum Odyssey and you do activities on the Arbitrum blockchain, you will get NFTs. And if you get a certain number of NFTs, people are expecting an airdrop of a future Arbitrum token. So wanted to mention these three, as these three are the leaders in the clubhouse when it comes to Ethereum scaling solutions and the trust that's attributed to Ethereum. And that point at the end is really key. A lot of these blockchains, it's a trust game. Everyone uses Ethereum, and NFTs have high value on Ethereum because we trust Ethereum. That trust adds value to assets that sit on the blockchain. That reputation of being trustworthy and secure for Ethereum is being, in my opinion, added to or attributed to Polygon, Arbitrum, and Optimism. And it seems like they have a positive kind of public perception that they are trustworthy because Ethereum is trustworthy. So mentioning those three, there are three different bridges that you could use, or a bridge. Each blockchain has a bridge that you could send assets to from mainnet over to Polygon, through the Polygon bridge, over to Arbitrum through the Arbitrum bridge. As you can see, I've actually recently did about $1,000 transfer so that I could participate in the Arbitrum Odyssey and get a little bit of money over on Arbitrum that I actually don't expect to move back from Arbitrum anytime soon. And lastly, we do have the Optimism bridge as well. If we wanted to send over ETH or USDC to a layer 2 scaling solution, or to Optimism, we could do it through their bridge. And one quick point is that do note that you can send other cryptocurrencies other than ETH. You can send USDC, which is what I typically do when I bridge assets. I try to send over stable coins so that from a tax and an organizational standpoint, it just makes things a lot easier when you're dealing with stable coins. So there are three different bridges to three different scaling solutions for Ethereum, in my opinion, during this bear market. Find one or two that you want to participate in, bridge assets over, and then start to participate on those blockchains. And this is all in preparation for the next bull run, when I expect there to be far more demand for block space on those three blockchains: Polygon, Arbitrum, and Optimism. Bear market strategy number 3, and that is build. And build is a little bit too generic. It's really get down to work. What is your career expertise? Whether that's you're just leaving college and you're discovering it for yourself, or you've been in industries 4, 5, 10, 15 years and you already have your expertise. Whatever it is, pair that over and migrate it over to the digital age and into the Web3 space. I'm here on learnweb3.com, so this is more for a technical solution. I went through the freshman track recently, really helped me get a better understanding of blockchains and Web3 commerce. I'm going to go through the sophomore track the best I can, but it does get pretty code heavy pretty quickly. But outside of code and more technical analysis, let's talk about a few overarching, types of professional employees. If you're in business and you're in operations or customer success or any type of aspect that helps the business run functionally, well, let me tell you, decentralized groups are managed terribly, and we need you over here in Web3. Decentralized groups, DAOs, NFT collections, DeFi protocols, most are not run with best practices of how to run a business. So we need you over here, operators. The Web3 space needs you. A lot of the operations right now is masked as community management, but in my opinion, the community managers of early 2020s are going to be the COOs and the vice presidents, in the 2030s of Web3 and decentralized communities. If you're an artist, there is an increased need for your skills in the NFT space if you're an artist. A little bit of a renaissance, in my opinion, for an artist. in the Web3 space. So come on over. We need your talents. We need your expertise. A world-class business needs world-class artists in the NFT space. If you're in sales or if you're in marketing, Web3 groups, decentralized groups, NFT collections, DAOs, we all need business development and we all need marketing professionals. A lot of the marketing and sales and business development in Web3 right now is a bit amateur hour-y, and we need best practices from, traditional Web 2 marketing and sales places to come over and give best practices to Web3 organizations. And let's say you're in product or engineering. Well, learn some Web3 code, go to places like learnweb3.com and, learn some smart contract engineering, learn the pitfalls of product development in Web3, and then fill those niches. We need a lot of product people, and of course, we need software engineers over in the Web3 space, so come and join. But that third bear market strategy is pretty much get to work, find your niche, and then carry that over to crypto, to NFTs, and to the Web3 world. Lastly, number four. Number four is the hardest and probably most effective strategy during the bear market. And for right now, that is do nothing. Stack cash, stack investment, stack assets at the moment for future deployment of those assets later this year. Right here, I am showing the total crypto market cap chart. I think we have a 1 week intervals here. And pretty much I'm showing you this because I am really looking to 2025. You can't quite see that because it's behind my head on the camera. But this green period here is a period from August 2025 to about March of 2026 for an estimation of the peak of the next bull run. We have some time before the next halving, and in this time between now and the halving is when these 4 bear market strategies should be implemented. The fourth one being, unfortunately, do nothing. Unfortunately, let's watch prices. I know I am sitting on the sidelines a lot more than I was in 2021. Strategies of 2021, where we were more aggressive, deployment of capital, seize opportunities now for the short term. Those same strategies are not going to work, in my opinion, in 2022 and 2023. So have patience, stack your assets, your capital, your stable coins for future deployment into whatever you want within Web3. One of the big strategies I'm trying to do this year is to get ETH for under $1,000 or under maybe hopefully $800, hopefully under $700 for a few weeks, and then use that ETH in a couple of years when it's over $2 or $3 grand. So purchase ETH at a very low price, under $1,000, and then spend that ETH and invest it on NFTs when it's over 200, 2,000, 3,000, 4,000 per ETH. Then you will have low capital invested ETH that you can redeploy into higher risk assets in the next bull run. So this fourth point, like I mentioned, is a bit of a vague one, a bit of a tougher one to implement right now, actually, but it's literally do nothing, stack your assets, because we're going to have a lot of opportunity later this year and into next year. And of course, to wrap this all up, come over and check out collectiveshift.io, where we have copy portfolios, 4 different portfolios here, from beginner, early stage, long-term, and an NFT portfolio. We also have an airdrops page, an assets page, and continuous content coming out of our content feed. So let's wrap it up right there, and we will just quickly summarize, in what my opinion, 4 bear market strategies that we can operate, that we can implement over the next 18 months to 24 months. Those are: find your digital identity, own your avatar, own your name online, own your Twitter banner if you can. We will not just use these avatars on Twitter and Discord in the future. There will be plenty of metaverses and social platforms for us to connect our wallets and connect our digital identities to. Second off is explore ETH scaling solutions. In my opinion, Polygon, Optimism, and Arbitrum carry the trusted name of Ethereum, and therefore, there's just a little bit more trust there in the market for those 3 solutions. And I think that's going to go a long way when there's demand for block space. Now, third is build, or what I'd rather say is just get to work. Find or understand your personal strengths and carry those over into the Web3 crypto world. We talked about business, artists, engineers, salespeople, marketing, product people. You all of us have our expertise, and Web3 in the digital age needs them all. And number four, unfortunately, is do nothing. Stack that cash. Do not invest as heavily as you did in 2021. Have patience. Stack ETH below $1,000 in my opinion, hopefully below 700. But effectively, the less we do now, the less we deploy capital now, we can stack and save assets and capital for future deployment in 6, 9, 12, 18 months. We'll be putting out another video once we think that the lows are in and that deployment should happen. But right now, we should be looking for where that bottom is later this year, and trying not to over invest ourselves at the moment. And those are the 4 tips. Thank you everyone that got this far. A little longer than I thought it would be, but it's very exciting to talk about really this opportunity we have over the next 3 years leading into 2025. Seems like a long way away, but it will come soon. Thank you everyone that got this far. Really appreciate you being here. We'll be back at it next week. Bye for now.